Excellencies, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, good afternoon, good evening to all joining us from Malaysia and from across the world. Welcome to the first session of KLIFF 2021 titled Global Islamic Finance, the Road Ahead, focusing on Islamic finance amid COVID-19 pandemic, digital banking and Islamic Fintech, Islamic social finance, alternative investment, human capital, governance, standardization, and regulation. Joining us are 6 internationally renowned expertise in their fields. This session will be moderated by Group Chairman Amanie Advisors. Ladies and gentlemen, please welcome Datuk Dr. Mohamad Daud Bakar. Sir, the virtual stage is all yours.
Thank you, Madam MC. Bismillah ar-Rahman ar-Rahim. Alhamdulillah wa bihi nasta'in. I have the pleasure to welcome each and every panelist for the very first session after the opening session just now. I'm very grateful to have on digital stage a panel of speakers from all over the world to share their insight, their perspective on the topic which is very much relevant to the main theme of the conference, the road ahead, Global Islamic Finance, the road ahead. I am pleased to invite each and every participant, every speaker to share their point of view in the next 3 minutes or so. And before that, it is always a pleasure to see all the old friends on the same virtual stage to be speaking to the audience. I'm sure the audience will be, grateful to hear your point of view in the next few minutes or so. So we have 6 prominent speakers. We have Mr. Adnan Zaylani, Mohamad Zahid, the Assistant Governor from Bank Negara, Malaysia. We have Madam Sharifatul Hanizah, Said Ali, the Executive Director, Islamic Capital Market Development, Securities Commission in Malaysia. We have Mr. Firas, Raad, Country Manager, World Bank. We have Farmida from Norton in London. We have Rafe Haneef, the CEO Group Transaction Banking or CIMB, and last but not least, Dr. Bello, Lawal, Danbatta, Secretary General of FSP. So, ladies and gentlemen, in this session, I will invite each and every speaker to share their thought and their insights on the global Islamic finance pre, during, and post perhaps COVID-19 in your own way of articulation, own way of interest. Perhaps if I may invite Mr. Adnan Zaylani to start off your intervention. Please, Mr. Adnan Zaylani.
Bismillahirrahmanirrahim. Yang berbahagia Profesor Datuk Daud Bakar, fellow panelists, colleagues, participants, and also ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. Firstly, I would like to thank the organizers for kindly inviting me and also on behalf of Bank Negara to speak and give our perspectives for this conference. I noticed that keynote addresses really were quite summed up quite well the various challenges and also some of the solutions that were already being rolled out to get us out of this recovery. My remarks will probably just touch more focused towards the financial sector and obviously in Malaysia. I think for us at Bank Negara Malaysia, of course, one of our key objectives is to ensure that the financial sector is able to, and it does, support fully this sustainable and also an inclusive economic recovery. And within that, our view about Islamic finance is that it has to play its natural and also expected role in supporting this recovery. So I think we've discussed for a long time in many venues and forums about how Islamic finance appeals to many of the issues at hand: sustainability, alleviating poverty, and also supporting the economic recovery as a whole. So this is a challenge for Islamic finance, that we see that it has to deliver its value proposition, in particular during these times. Where we see things right now, we do see that Islamic finance, so far, the Islamic financial institutions, Islamic banks, and also takaful companies, takaful operators, they're able to match hand to hand with their conventional counterparts, and that's already something which is very encouraging. Nevertheless, we would also like to see if Islamic finance can actually go even further than that and deliver some new solutions. In particular, we know that in today's economy, debt levels are already very high. And even though we have seen debt levels come down, but the crisis with the introduction of additional financing, where actually not just Malaysia but globally everywhere, governments and the financial system has pushed out more debt as part of its relief measures to alleviate the hardship and also to kickstart the recovery. But we know that too much debt will eventually come to a point where perhaps there are other risks that we have to deal with in the future. So that's where we think that Islamic finance could potentially play a role. I mean, in Malaysia, we have within the current existing frameworks, we already have developed some new blended financing programs, which I think some of the keynote speakers, our minister also mentioned about making use of some of the wakaf and zakat funds, and we put it in a program, in a blended finance program to tie it with financing by Islamic FIs, so that these can be offered to entrepreneurs, so the debt burdens are not too high, and they can resume and perhaps even invest in new areas of business. Under our Islamic Financial Services Act, also the Islamic banks can play a bigger role in terms of collecting, mobilizing capital in the form of risk-absorbent capital, or even some types of equity or hybrid financing that can go towards supporting the economic recovery or supporting new financing, which is not just in the form of straightforward debt. So there's card financing. There's also other philanthropic and social finance programs that we've seen being rolled out during these times, and this also includes some protection in the form of protection in terms of free takaful for B40, and we have our own low cost takaful products in a scheme called Perlindungan Tenang. So I think there's some way to go. But before I finish my opening remarks, I'd just like to talk about also an issue which was brought up by the keynote speaker on sustainability itself. So Islamic finance, this is an agenda which is quite aligned to Islamic finance. And in Malaysia, of course, we launched the value-based intermediation initiative a few years ago. And I'm quite pleased to share that we've seen so far 155.6 billion financing by our intermediated by our community of practitioners, which comprise a few of the Islamic FIs. So these have gone towards including projects, renewable energy and green financing projects as well. So a lot of work is currently being done in this area, I think, by the community of practitioners, the Islamic FIs, but also together with the Securities Commission and also other market players in a joint committee on climate change. So these are quite promising developments, and I hope the industry will also be able to further take this forward and roll out new products and also new practices with this. I'll just stop there, Datuk Professor. Thank you. Pass the floor back to you. Thank you.
Thank you. Thank you very much, Mr. Adnan Zaylani, for that comprehensive report on the, on the front of Bank Negara Malaysia and the banking sector in Malaysia, what has happened in the past. I think before I invite the second speaker, Madam Sharifatul Hanizah, with great sorrow, I have to share with the participants, speakers and participants that her mother-in-law just passed away a few minutes ago. So our praise and thought, go to Madam Sharifatul Hanizah. Perhaps we can, ask her to say a few words. If you wanted to say a few words, Puan Sharifah, Madam Sharifah, and after that, you may leave the session to join your family and to pray. All of us will pray for your the roh, the soul of your mother. May Allah subhanahu wa ta'ala bless her soul and put her among the righteous, among the mu'minun and salihun. You may say a few words, Puan Sharifah, and you may leave the session after that. Our praise and thought are with you and your family. Thank you. Please, Puan Sharifah.
Bismillahirrahmanirrahim. Assalamualaikum and a very good afternoon, Yang Bahagia Datuk Moderator, fellow panelists and esteemed guests. First of all, thank you very much for the du'as, Datuk, and for indulging me in this next few minutes to get through. I would like to still continue and say how much, whatever I can do to contribute. I appreciate the opportunity to exit early. I will try and stay on as long as I can, and along the way I will see what happens. Thank you very much again. I think first of all, thank you for the opportunity for myself and basically for SC to be part of this conversation in this esteemed event. Flagship for the Islamic Finance fraternity. For most of us, we've gone through, this is the 16th, and the continuity of this, as stated by His Royal Highness earlier, was that this is allowing many stakeholder groups to take part in thought leadership and allow us to partake in how we want to form and shape the Islamic finance industry. 16 years, we've discussed a lot of subject matters that come here. But the past year and what a year it has been, I think, for everyone. We have lived with loss of lives and livelihoods, and the unprecedented became the norm. But from a holistic perspective, notwithstanding the turmoil, as the regulator of the capital markets, SC basically deployed a wide range of tools the past year, especially to provide relief to the market participants and support to the market and its stakeholders. Obviously, this is not business as usual, and we knew that extraordinary times had needed extraordinary responses. For SC, I think it was imperative that markets continued to be able to operate in an orderly manner. We knew that access to funding was necessary to maintain confidence so that there was a long-term recovery projection for the market. And I think that's how SC responded to ensure continued market operations amidst volatility, amidst the projected prolonged crisis. But I also want to share that for SC, the tools we deploy don't distinguish Islamic and conventional. Frameworks in general is applicable to both Islamic and conventional. And what we did basically encompassed, we implemented market mechanisms, market management and control mechanisms. We facilitated PLCs, for example, from reporting requirements. We allowed trading and business continuity to go on. We provided relief for companies facing cash flow struggles. We also empowered intermediaries with flexibilities in their services. In fact, like everyone else, we embraced virtual, and I think we went first in terms of enabling virtual or hybrid AGMs, so that no matter what stakeholders' interests and investors' interests were always protected and kept intact. Throughout that, I think notwithstanding the trying times, we knew that conduct expectations needed to be set for intermediaries and auditors. And I think that's where we realized that sometimes in hard times, although I think that, as you mentioned earlier, when there is, the only constant is change, but sometimes change allows opportunities in both a negative and positive way. So we also saw intensified need for education and scam alerts, for example, because everyone was going digital, obviously, and we did it to make sure cyber security was also high on that list of priorities. I think for SE, in this current times where we are trying to adjust to the impact, not only do we monitor, but we will continue to evolve in terms of our responses. As the keynote speakers also have said, many crises have been experienced by global and domestic markets, but our infrastructure is strong, and I think we can sustain it. But throughout that, some of the approaches where we covered Islamic and conventional markets, we continued on developmental initiatives in the Islamic space. We focus also on broadening suite of products, because obviously risk, reward, and capital dynamics changed. The agenda of sustainability and inclusiveness was always is always high in our list. And last year we facilitated introduction, for example, of the Wakaf-based collected investment schemes. We also allowed alternative investments to be broadened in terms of choices to investors, where we liberalized requirements for the private markets. And I think that helped processes for small and medium enterprises to widen investor and issuer ban. I think we also recognize that digital financial inclusion agenda cannot be left out. Obviously, going digital is non-negotiable anymore. And we wanted to increase participation. And therefore, I wanted to touch on this a little bit more later. But, and Datuk, you are very well aware of this. Last year was a groundbreaking time where we, Sharia Advisory Council of SAC, announced the development in terms of digital assets. And thereon, we are looking at the progression of innovation in that space. So I think we're looking at the industry to also seize the opportunity to accelerate digitization transformations. Record numbers of online accounts, for example, open. Retail participation has reached record highs. And whilst we are looking at a negative growth projection by the IMF, I think it's important to note that in the Islamic space, global asset and global equity continue to outperform. And that's very encouraging. And I think that's also because the positive performance, for example, of Islamic funds is always about the fact that it does have limited exposure to the conventional finance sectors and companies with high debt level. That obviously has higher volatility, and that's also brought about some buffer for investors. I'm just going to stop there. I think in terms of the new strategy and approach, if you don't mind, I will try and continue. I'm trying to sort out a lot of things, indulge me in this, but I will leave it at that for now. Thank you.
Thank you, Madam Sharifatul Hanizah, for a very, high-level perspective, as well as the micro products that you have been able to launch in the last few months or so to respond to the market condition and to the changing variable and situational, behavioral, as well as the economical, impacts in our society. There are many keywords that have been writing on: flexibility, relief, empowerment, education, and hybrid and virtual. These are the new key words basically in our time, not only in Malaysia but worldwide. But we leave it at the moment. We might come back to you on a few of the issues you mentioned just now. Let me move on to the World Bank perspective. Mr. Firas, Raad, perhaps you might share with us what have you seen from the World Bank perspective, just to summarize what has happened in the world for the last 12 months or 13 months or so. The screen's yours. Yeah.
Thank you, Datuk. I just want to make sure that you hear me.
Yes, very good. Yeah, clear.
Wonderful. Yeah. Bismillah ar-Rahman ar-Rahim. Thank you, Datuk, for the kind invitation to join this distinguished panel on behalf of the World Bank Group and its Inclusive Growth and Sustainable Finance Hub here in Kuala Lumpur. I will say a few words about our view on the economic impact of COVID-19 in 2020 and what the general outlook is for global economic recovery in 2021. Essentially, COVID-19, as we heard earlier, is a once in a century event, and it led to 3 simultaneous shocks impacting countries: a direct health shock from the virus itself, an economic shock due to access and movement restrictions, and a growth shock because of global recession. This led to a global contraction of more than 4% in 2020, affecting over 189 countries, and had devastating consequences for millions of lives and livelihoods, eroding much of the human capital gains achieved by countries over the past decade. Now, looking forward, we expect that global output will expand by around 4% in 2021, but will remain well below pre-pandemic projections. Growth in emerging market and developing economies without China is projected to be about 3.4%. With China, the estimate is higher at around 5%. At a regional level, we see an uneven recovery, with China and Vietnam growing faster than countries in developing East Asia. Over the next month, we will be publishing a new macroeconomic update incorporating a revised outlook for the region in 2021. With respect to the impact of COVID-19, Datuk, I would like to highlight briefly 3 additional points with your permission. First, the global pandemic has led to a surge of debt levels in developing countries, as we heard from AG Adnan, exacerbating an earlier buildup of indebtedness, raising concerns about debt sustainability going forward. The global community will need to act swiftly to make sure that this situation does not lead to a string of debt crises in many developing countries. Second, the coming decade is likely to be one of economic disappointment. The pandemic has caused major disruptions and is likely to have long-lasting adverse effects on global economic activity and per capita incomes. In view of the weak fiscal positions and elevated debt in many countries, institutional reforms to rekindle robust, sustainable, and equitable growth will be of paramount importance. Third, the impact of COVID-19 on investments is likely to be deep, persistent, and broad-based. Investment is projected to expand in 2021, but not sufficiently to reverse the decline in 2020. Investment is likely to remain weak in the coming years, but it's possible that renewed investment in digital technologies will spur productivity gains in some sectors. I will leave it at that, Datuk, for now. I can come back in later to talk about Islamic finance and the SDGs during the second round. Back to you, Datuk.
Thank you very much for highlighting some trends in the world and in part of the world. It's quite unfortunate to hear the investment impact will not be that positive in the near future, but hopefully you might share with us later on what would be the strategies moving forward to reduce the impacts of the COVID-19 other than on digital and health sector perhaps, so that the broad-based economy can also take advantage to move forward in the next few months and few years, inshallah. So allow me to move on to our speaker all the way from London, old friend. We have not met for many, many years by now. Farmida, speaking out of London. So perhaps Farmida, the screen is yours for the next 3 or 4 minutes to give some, your own outlook of the Islamic banking practices and to some extent economic activities in Europe, Middle East, and perhaps beyond if you have some exposure. So the screen is yours.
Thank you, Professor, and hello everyone. I'm delighted to be able to join you from quite early in the morning in London. I'm a lawyer, and the Islamic finance work that I do tends to be cross-border. And I think what we've seen in the last 12 months since the crisis started from our perspective is that the move to virtual working was seamless. It was extraordinary. We left the office on a Friday and picked up immediately. We had expected there to be a significant drop in activity, and to some extent the opposite happened. We've all talked about the increase in debt. We found at the beginning of the crisis
we lost you, Farmida. Farmida, I think the line is disconnected. This is, the new normal in new normal technology. Okay. I think in the interest of the time, perhaps Farmida will be able to join us a bit later. If I can move on to the next speaker or panelist. Rafi, I'm coming to you now. You are a senior banker, Islamic banker, and have been exposed to many geography of the world in Dubai and in other parts of the world, now in Malaysia. So perhaps what would be your take on the, your family that's coming now? It's okay, Rafi, you may continue, and Farmida will be joining a bit later. The screen is yours.
Thank you. Assalamu alaikum, and a very pleasant afternoon to everyone. I would like to thank the organizers for having me here, and hello to everyone. If you look at the industry as a whole over the last 5 decades, it's been 5 decades since contemporary Islamic banking was developed. We have seen a steady growth in terms of markets, products, range of services. And today, the estimated size of the industry is close to $3 trillion. In 2019, it was 2.88 trillion and grew at 14%. We don't have the latest data for 2020, but we have seen significant growth. And one constant thing that I've seen every decade is this healthy and engaging debate on what is the true purpose of Islamic finance. And we have seen, in the 90s, the debate was around the sustainability of debt financing. The debate whether muawada contracts, the tijara contracts, whether that should be promoted compared to, say, shirka contracts, the mudaraba, the profit and loss sharing. So that was going on in the 90s. And then after the millennium, the debate shifted towards Sharia compliant contracts versus Sharia based contracts. But the essence is still the same, whether we should be promoting more debt-based financing or should we pivot to profit and loss sharing, for example. And then in the last 10 years, we have seen the discussion turning a new point around risk sharing versus risk transfer. But the essence is still the same. Should Islamic banks be promoting more debt-based products and services, or should it be actually emphasizing on profit and loss sharing? But if you look at all these debates in various forms and shapes over the last 3 decades, it's actually talking about sustainability of the financial sector. Whether debt-based financial sector that is part and parcel of this fractional reserve banking that has been embodied in almost all the economies in the world today, is this something which is in line with the Maqasid al-Sharia? Now, what has happened in the last 12 months since COVID? Our awareness of impact has actually broadened beyond just sustainability of the debt-based system. What we understood now compared to years ago is that when the scholars, the fuqaha, were talking about maqasid, they were actually looking at the true impact of the financial services, whether it is positive or negative impact, across all the spheres of maqasid. So if you look at the way Imam Ghazali articulated maqasid in the 11th century, he was focusing on those impacts that were prominent during his time, which was protection of religion, protection of life, intellect, lineage, and property. But today, if he was around and looking at the real needs of the world today, he probably would have had, a broader set of maqasids, objectives to track. And that could be very much in line with these sustainable development goals. So if you look at the protection of life under maqasid, that could be SDG that covers life on earth, life underwater, right? No poverty, no hunger, eradication of, social inequalities. So these are maqasid aligned. So Islamic banks need to have a broader view of maqasid and join and align with the global movement in terms of making sure that the provision of Islamic financial services are aligned with the broader set of maqasids, which could be SDGs, of course, we could be part of this SDG movement and try to shape SDGs according to the vision of Islam. So today, the reality is there are global organizations like United Nations Environmental Program for Financial Institutions. There are around 350 members, but there are only 5 representatives from the Islamic banking sector, where it's our role as Khalifa, as stewards and trustees of this world to drive sustainability, to ensure that through our services, we promote positive impact, which is effectively Amr Ma'ruf, and reduce negative impact, Nahi al-Munkar. So as stewards, we should be driving it, and we should be part and parcel of these global movements and adopt and be a driver in terms of, for example, shaping the principles of responsible banking. 217 members across banking and insurance have joined it. And I think there are only like 2 members from the Islamic banking industry. So we should be supporting this, we should be driving this. And I think Islamic banking should actually move beyond the debate of whether debt is sustainable. Debt could be sustained if there is no negative impact. If it promotes positive impact in line with SDGs and reduces or eliminates negative impacts, that should be in line with Maqasid. But if a Mudaraba contract is creating negative impact and not promoting positive impact, it should not be promoted. So I think essentially we need to broaden the Maqasid and look at how we can be part of this global movement to move towards sustainability.
Thank you, Rafi, for that always thought-provoking, insight that you have shared just now. If I may comment, even for the SDG post-COVID-19, perhaps there will be a new committee to be set up to look the impact of the COVID even on the landscape of SDG. Perhaps they need to reprioritize, they need to relook into a few other strategies to catch up with the new facts and data of the world. Farmida, we have lost you just now. I wanted to come back to you to continue your presentation. Now the screen is yours. Yeah, please.
Thank you, and apologies for that. I was talking about what we had seen as an international law firm, and I was saying that for the first quarter, so from the crisis, so from March to June, we saw a huge rush for liquidity, whether that was Sharia compliant or conventional, because our clients expected there to be concerns around cash flow. But I think we all, many of us found that life continued pretty much as normal, and where there were issues around cash flow, lenders, financiers were being flexible and adjusting to the needs of their clients. So I think we had expected that there would be a lot of defaults, a lot of steps towards enforcement taking place last year, and that generally did not happen because lenders were being accommodating, understood that they couldn't, generally speaking, allow their customers to fail because of what was a short-term crisis. And I think the other really interesting thing that developed last year was the focus on sustainable finance. We've all been talking about it. And I think if you've been interested in sustainable and impact finance in the way that I have for a number of years, it's been disappointing that Islamic finance has not embraced this in the way that I think it should, because the objectives are inherently Sharia compliant and meet the objectives of the Sharia that we've been talking about. But sort of social finance, sustainable finance had been a relatively small part of the overall financial markets. But last year, particularly as sovereigns found that they needed to raise money to deal with the medical emergency, the issues around unemployment, we found that there was this huge response from investors. So last summer, we found the EU came to the capital markets and wanted to raise 17 billion euros for its unemployment scheme, which I think is called SURE. And that attempt to raise 17 billion euros resulted in an order book of 233 billion euros. It was an extraordinary response by the investor community to the needs of the pandemic. And what it reflected is what has been happening really in social finance generally. It started, 5 years ago, it was a tiny part of the market. Now it is increasingly growing. Many, many more investors are consciously entering this market. And for me, that is where Islamic finance needs to be, sort of as a subset of that market, because that, investors, international investors have always been agnostic about the structure of deals. They've always looked at the fundamental economics of what was being put to them, whether that was conventional Sharia compliant. Those same investors are now being values driven, and Islamic finance, I think, can really tap into that market. So I think that's an extremely positive development. We talked about earlier about the SDGs and what things are going to mean going forward. We see the trend around social finance, the impact on SDGs, recovering from the current crisis in a better, fairer way as one of the drivers of finance going forward. And I think that's extremely positive for where Islamic finance can move to going forward. So I'd be happy to develop these points further during our discussion. But thank you.
Thank you, Farmida. Perhaps in the next round, I would like to, get your insight. What would be the strategic and the most impactful prescription to induce our Islamic financial, players and institutions to embrace on the SDG and the climate change and what have you more aggressively? Perhaps you have come across some of the issues on the ground from the European perspective, so that we can bring those insights to many parts of the world, so that if not all, but most of the Islamic financial industry or players are in tune or in sync with the new development of the sustainability. Thank you for that. Now we have come to the last speaker of the first round, my good friend as well, Dr. Bello Lawal, Danbatta from ISP. Of course, you are looking from the governance, the regulation point of view for Islamic financial industry. So perhaps you may share with us, your insights on what has been the implication of COVID-19 on the industry, on the regulators in particular, and some of the takeaway that you feel you have the liberty and the excitement to share with the audience today. Thank you.
All right. Bismillahirrahmanirrahim. Wassalatu wassalamu ala Sayyidina Muhammad wa ala alihi wa sahbihi wasallim. A very good day to all of you, because I believe some that are joining, we are in Malaysia here is evening and others are in the morning. So assalamu alaikum wa rahmatullahi wa barakatuh. A very good morning to all of you. And it is indeed a great pleasure to have good friends and colleagues in this session. I thank you, Datuk Daud Bakar, for this wonderful moderation of this session. And I also thank the organizers for giving the IFSB the opportunity, and me in particular, to be one of these speakers in this session. I believe a lot has been said by the keynote speakers. His Royal Highness and His Excellency, the Minister of Finance and the Sultan of Iraq, has articulated quite a number of issues due to the pandemic. And I believe they have also provided some insights more into the way forward. But however, that, as you mentioned, that the IFSB, I think for the benefit of the members, it is a global umbrella body that play a very, very crucial and significant role in the prudential regulation of the global Islamic financial service industry. So our own perspective as a standard setting body is basically looking at the impacts of the pandemic generally on the three sectors, basically banking, Islamic capital market, as well as the Islamic insurance. it is quite, I can say, encouraging. And I think we have appreciated the role that has been played by our members. For the benefit of those that are not aware of what IFSB is all about, we, as I mentioned, we are a prudential standard setting body that's currently have about 188 members from 57 countries. That include 79 regulatory and supervisory authorities, including 9 international organizations that include the IMF, the World Bank, the Islamic Development Bank, the Asian Development Bank, the United Nations Development Program, and many others. They are all members of the IFSB. Now, the global economic lockdown due to the pandemic has resulted in quite a number of challenges. The financial system, the economic activities, as all highlighted, has been shut down. And this resulted in quite a number of concerns for the regulators and the government as well. So the government and the regulators responded with quite a number of policies and measures to mitigate the impact of the pandemic on the economic and the financial system in general. Now, the IFSB is very much concerned about the kind of policies and policy responses that has been initiated by the pandemic. And on our own part, we try to reassess the potential implication of the pandemic, because this is a unique crisis. It's not a normal financial crisis. We have in the past issued standards that try to provide guidance on how our members and all the jurisdictions that participate in IFSB membership will be able to handle financial crisis. But the COVID-19 pandemic crisis is a very unique one in the sense that it's a hybrid, as mentioned by previous speakers. It covers quite a spectrum of issues and maybe general economic development. Now, the IFSB, what we did, we have to change our priorities. We have to look at what are the areas and the potential implications on the pandemic, as well as the policy responses by the government. Now, we are very concerned about the policy responses like the moratorium, the debt reschedulement that has been introduced. We want to make sure that these are, they are good policies that we welcome as a development to mitigate the impact, but at the same time, we want to ensure that our members have some safeguards in place, some kind of a very well-defined exit strategy to some of these policies, because now that we have a shock due to the pandemic, and we introduce some, policies and flexibilities into the financial system, definitely when you are exiting from these policies, you also face some shocks. Now, at the same time, we'll also look at the impact of the lockdown on the assets of the Islamic financial institutions, which really resulted in a high level of impairment of some of these assets due to maybe some sovereign ratings that is being downgraded for some jurisdictions. But what I would like to share with the audience is that based on our internal assessments, what we did was actually we at the IFSB, we developed a compendium of policy responses among all the 79 regulatory and supervisory authorities that are members of the IFSB. And we try to analyze these policy responses, and we try to see how we can be able to track these policy responses. What we have considered is basically to make sure that the stability and the resilience of and the soundness of the Islamic financial service industry is not at stake. It's actually being sustained, and it is being managed, and all risks being mitigated. So I would like to share that the Islamic financial services industry, compared to the conventional one, so far has demonstrated its resilience once again. And we are very happy to see the development and the responses by our supervisory and regulatory authorities as members. Having said that, the issue of the accelerated digitalization that's now we are talking about, that is inevitable, as highlighted by my colleagues speakers here, particularly I think Sharifa has highlighted that it's just a must, it's no option. Now, this has also posed another greater new challenge and a new risk for the global Islamic financial service industry. We want to make sure that we work with the regulators to ensure that some safeguards are put in place to mitigate against any potential cybersecurity risks, and as well as the risks, operational risks that may be arising due to the remote work from home. We have seen everybody is working from home, and products and services are being provided. So we were very, very concerned to ensure that proper safeguards and a robust, sound regulatory framework is there in place to mitigate against this kind of potential risks. At the same time, we were also concerned about the recovery plans by most of our member jurisdictions. While we appreciated the recovery plans and we saw it as well articulated at the as IFSB, that those that are responsible for prudential regulation of the global Islamic financial industry, we were very, very determined to ensure that the recovery plans includes the reassessment of the application of the philosophy of Islamic finance, particularly to address the issue of the Islamic social finance, as highlighted, I think, by Brother Rafe on this issue of social finance. The Maqasid of Sharia need to be reassessed and need to see how the commercial banks will be able to structure products and services that are meant for the society and for the Ummah that has real economic attachment, to the industry. Hence, the IFSB were very, very pleased to come up with, research papers and as well as guidelines that will promote the adoption and the application of Islamic social finance instrument like the Zakat, Waqaf, and Sadaqah. So we are very, very concerned about that. At the same time, now the issue of the SDGs that has been highlighted by His Royal Highness in his keynote address and supported as well by the Honorable Minister of Finance, Malaysia. I would like to share the fact that we have done a research and a study at the IFSB, and we discovered that 11 out of the 17 Sustainable Development Goals actually have a natural fit with the Maqasid Sharia. Initially, many studies has already identified 9 to be such, but I think the effort that is being demonstrated by or being embarked by the United Nations Development Program, the honor of the Sustainable Development Goals in Islamic finance, has been very, very commendable. I think one of their effort is actually the joining of the IFSB membership, which they did in 2019. In addition, in addition to all other efforts and philosophies and principles that are developing to be able to, accommodate the sustainable Islamic finance in the achievement of the Sustainable Development Goals. So I believe Islamic finance is quite, aligned, and I believe a lot of efforts are being done by our members. And but what is more important is actually the issue on the financial inclusion agenda. Definitely, it is what will drive the achievement of the Sustainable Development Goals. We know how the OIC member countries, based on the statistics of the World Bank, in which they said only 41% of the Muslim population are actually having an account among the OIC member countries, and quite the impact that this will have on the OIC member countries and all the global Islamic financial Islamic industry will be tremendous if no financial inclusion agenda is being embraced and being taken note of. So as a result of that, the IFSB, we have actually since issued a technical note 3 on financial inclusion in Islamic finance, in which we articulated various models and applications and guidelines that need to be, being looked at by the regulators that are members of the IFSB to enable them support the industry by coming up with a new product and services that are more of financial inclusion. This is actually the financial inclusion standard look at a quite broader spectrum. It's look at the Islamic social finance. It also look at the Fintech. It look at the collective investment schemes. So it's quite, and as well as microfinance. So I think these are maybe perhaps what I will be able to share for now. That maybe be able to provide more detailed discussion on these issues. Thank you, Datuk.
Thank you, Dr. Bello, for that high-level presentation on what has to be done basically to respond to the COVID-19 from the regulatory and policy perspective to make the market always resilient and robust to face the unexpected consequences of this pandemic. So let me move on to the second round of intervention. if I can start with AG, Assistant Governor first, sir. I think we have heard from His Royal Highness the emphasis on the digitalization, smart technology, and that can help on the financial inclusion, that can bring everyone on the street to become, to be onboarded to the banking through the mobile phone and what have you. So perhaps from the central bank perspective, what is the plan and the dream of the central bank, or Malaysia in particular, of encouraging, opening the door for digital banking and fintechs to come in and to help the whole society to be bankable and to be able to contribute to the new vertical of economy, digital economy, because we need the finance, but the finance should be processed now moving forward through digital banking and fintechs to make the time shorter, the cost is cheaper, and the whole thing will be smarter. So perhaps if I can invite Mr. Adnan, the AG, to share with us what would be the dream, the grand design of central bank on the digital banking and fintechs in Malaysia.
Thank you, Datuk. Of course, you've outlined, and I think the keynote speakers also outlined what benefits that we expect, what do we want out of digital banking. And I think this goes back to fintech. Fintech, 5 years ago, when we launched our fintech, our regulatory sandbox, what we're looking at is the delivery of financial services using technology to be more efficient, more cost effective. And in fact, it could also lead to new products, better products. And I think digitalization is an extension of fintechs, where we're looking at the whole array of financial services being delivered digitally. So, yes. So all that promise is extended to the whole array of our financial institutions that are out there. So our vision is that firstly, the current incumbents, so to speak, the financial institutions, Islamic or conventional, they are free to digitalize. They can already go, they've introduced internet banking, mobile banking, all those are digital formats, digital forms of delivery of financial services, and they can go full-fledged into digital banking and delivery of financial services digitally. Where we come in with the digital banking framework is actually to attract new players. So to attract new players which in different, maybe new business arrangements, which could also involve some of the incumbents themselves. But if they can come up with a different platform or through a different partnership to deliver better, then that's something that can be considered. And we also target to really, for digital banking, to really deliver, be one of our conduits to enhance financial inclusion. So we know that the outreach of digital banking could be even greater than what is currently available. And with the government rolling out its 5G plan, it's willing to invest in new infrastructure. I think the prospect and the promise of digital finance, and not just digital banking, digital finance is even greater going forward. So the dream is that digital finance will probably be a major, I wouldn't say it would replace the traditional brick and mortar, but it would still be a major vehicle or conduit for financial services. And I think it will only lead to greater efficiency as a whole for the economy, and also to new products, and maybe extending it to in the realms of finance. We can also see better data analysis, better greater use of big data for essentially to enable better credit analysis and inclusion of new sectors or the marginal sectors that otherwise wouldn't have been able to avail themselves to these services. I think that also touches on a bit, maybe lastly, Professor, is on innovation. So I think one aspect that we also encourage strongly is in innovation, and we have the various sandboxes to also promote and allow innovation. And in that respect also, innovation is actually probably the key to continued growth and enhancement of living standards. So as a central bank, as a regulator, we try to encourage as much innovation as is possible, but of course there are risks in that, and I think we have to take a balanced approach on that respect. We have to be able to identify and mitigate any risk that could arise out of innovation. So similarly, digital banking is also a new innovative way of delivering financial services. There will be risks, and I think in our approach, we will take quite a balanced approach in there. Lastly, when we mentioned that we would like to issue 5 licenses, we also included the prospect and the possibility, and essentially an invite for an Islamic digital bank. So I hope that, and we haven't seen the applications come in yet. There's the closing date is roughly about June. So I think we might be able to see interest. There's already strong interest, but we also hope to see interest from Islamic players to set up Islamic digital banks. Thank you, Datuk. Yeah.
Thank you very much, Mr. Adnan, the Assistant Governor of Central Bank of Malaysia, for sharing with us the hope and the aspiration of Central Bank. Hopefully, the players outside there, please take the advantage. This is the time for us to digitalize the financial offering, not only to cut the cost, but also to include as many customers as possible, the workers, foreign workers, all the way to the low income and all the way to the sophisticated investors through the social and the digital empowerment. Puan Sharifah, if I may, come back to you. You mentioned just now in your opening remarks that one of the key focus of Securities Commission is to look into new alternative investment. And this is a big keyword basically, and new alternative investment. So the 3 keyword: new, alternative, investment. Investment itself is a very big word. What more of new and alternative investment? Perhaps you might be keen to enlighten your vision and the Securities Commission vision on how are you going to make it happen, and what are the new gift for us in the box that you can reveal to the audience today. What can we expect from the SC as far as the new alternative investment is concerned in next few months or so? Please.
Datuk, if I may, I actually was going to seek your indulgence. I will try and cover all the few items you wanted the panelists to cover, and I will probably even jump to the end because I would like to make my exit right after this.
Okay.
Just to respond to your question of the alternative, I think this is also a follow through of what AG Adnan said just now. Innovation has been always one of the traits of Malaysia's Islamic finance and Islamic capital market, and that brought that leadership level to different heights. And I think this is where, when you speak about alternatives or even look at its enablers, because technology and digitization is also both an enabler and can provide that innovation catalyst for a lot of products. I think what we look to is post the development of SC announcing the permissibility of digital tokens and digital assets as an investment. I think what we look forward to from the industry is, where do we go from here? I think I also like to throw the question back to the industry, because at the same time we can encourage the development or the embracing of such a subject matter, but at the end of the day, it's also supply demand, and where do you get that demand coming in? So I think to answer your alternative, whilst we look at growing those channels, I think what we'd like to see is to widen and deepen it at the same time. We are looking at that angle of digital assets being a mainstay, being a more prominent product feature. That obviously is going to take time. I think what we've started with alternative market-based financing platforms. We've started with ECF. We started with peer-to-peer. And these kind of platforms has actually allowed for democratization. So I think going back about 10 steps just now when we all talked about the agenda of sustainability and inclusiveness, it's found everywhere, whether from a digital perspective or whether from a WACA featured fund framework that we launched last year. End game is that we are still aiming for that inclusiveness. We're looking at inequitability being resolved, UN SDGs being part of the aspiration. So these are all enablers. Datuk, I think my response to you is that what we're looking at is trying to focus on the MSMEs actually. Right now, MSMEs remain mainstay of the economy for sure. We've seen their impact in the pandemic, and the ability to seek various fit for their funding would spur growth. The tools that we can help them with, the platforms we can help them with. I think this is what we'd like to strive for. I think a couple of weeks back, we also organized programs for SE where we're reaching out to see where in the halal and green sector, what would be the embracing there. I think for most of you who are familiar with the sustainability agenda under the ambit of SC, you would know that we have built a strong storyboard in the public market space. We've got significant traction in the green or sustainable sukuk to fund climate change mitigation projects. But I think where we're looking at, other than SMEs playing a valuable role in the supply chain or the climate change agenda, we also see how this risk capital can play a bigger role in the elevation of social issues. So I think we're trying to look at addressing all that in terms of social finance tools, digital, and pairing it all together, because they could be big wins, they could be small ticket sizes there, but at the end of the day, we all arrive at the same destination, which is the sustainability, the agenda, the inclusion. I think that's where most of what we talk about today. The narrative is that. I think if I may just quickly go forward, you're asking for something new. We would like to see greater traction in impact investing. I think responsible investing has been a game changer for the institutional investors, but there is that room to shift that sustainability agenda a little bit more. And I think had I been able to probably talk a little bit longer in this, we started off with some roundtable series last year on impact investment. If I may, I think I'd like to share with you the one lesson the past year is that both Islamic finance and Islamic capital markets must do to continue to cement its leadership is it has the ability to balance economic and financial development with societal good. I think that's where the highest of standards, if we look at it through the manifestation of Maqasid and this way of life, surely is the embodiment of attaining UN SDGs. And onto that, if you latch digital to accelerate, I think inshallah that objective of inclusivity and impact investment, we would see, I think what his highness said earlier, you would see that social and environmental return is side by side with financial return, not consequential. I think that's the gray area where we try and see financial, social, and environmental return. So that's the agenda where I think when we look at inclusiveness, where SE is going to is reaching out to the mainstays, but making sure also at the same time that the participants in the market are taken care of and it's done in an orderly manner. If I may, I mean, there are many more granulars, but I would have liked to chat. There's a whole lot of very good panelists here I want to, but I need to make my way. So apologies for the inconvenience to everyone.
Not at all. Thank you very much for staying with us. Amidst the the sad story that you have heard just now before we start the session, our prayers and thought are with you and with your family, inshallah.
Thank you again. I wish everyone the best, and maybe we can all catch up again later separately.
Sure.
Thank you. All the best. Thank you.
All the best. Thank you very much.
Assalamualaikum.
Alaikum assalam wa rahmatullahi wa barakatuh. Mr. Firas, I think you mentioned about a few things, and Dr. Bello has quoted you on the hybrid, causes of the crisis, economic crisis, and perhaps Dr. Bello mentioned about hybrid solution as well. Perhaps this is something that I wanted to follow up with you. Do you think can you see any potential immediate solution moving forward to prepare or to put on the table a quick win in order to recover our economy in Malaysia and the region and in the world at large? What would be the quick win strategy from that perspective? And perhaps if you can comment a bit, if you could, no obligation, whether we can Shariatize, whether we can put the Sharia flavor on the United Nations SDG, and how could we do that? Because that will be the mental block for many Islamic bank in the world, that they might see the SDG is not Sharia compliant. It's not even though IPSB has done their level, but how could we narrow the gap in understanding that SDG is Sharia compliant? So this is some of the few related issues I wanted to get your comment, Mr. Firas.
Great, thank you, Datuk. I'll say a few words on Islamic finance, and then I'll segue over to the SDGs and try to respond to some of your questions in the process. And with regards to Islamic finance, the World Bank doesn't officially publicly publish growth forecasts of private sector industries. But when you look at the outlooks published by organizations that do, like S&P Global Ratings, the Islamic finance industry is expected to exhibit low to middle single-digit growth during the 2021 period, following a high of 11.4% growth in 2019, as we heard earlier. Significant slowdown of the Islamic finance industry, as we all know, across all market segments. Islamic banking and sukuk and takaful is a direct function of the pandemic-induced recessions around the world. In the sukuk market in particular, S&P does not see core Islamic finance countries using this instrument as a primary source of funding, in spite of their higher financing needs stemming from the economic downturn caused by the pandemic. Yet in Malaysia, we did see the sukuk prihatin issued in the fall by the Malaysian government, which raised, as we heard earlier again, around 666 million ringgit, or passing the original target of 500 million. And this outcome revealed strong demand by retail impact investors. It offers a profit rate of 2% per annum, tax exempt and paid every quarter. It's also worth noting that the sukuk holders also have the option to donate part or all of the principal amount of the subscription when the investment period matures in September 2022, and that the proceeds from the sukuk will be channeled to finance programs that benefit those affected by COVID-19, including improving connectivity for rural schools and financing micro enterprises and SMEs, especially those owned by women entrepreneurs. Now, on the SDGs, Datuk, it's clear that COVID-19 has created unprecedented global public health challenges. It's increased unemployment and income, poverty levels, it's raised food insecurity, heightened social inequalities, and amplified fiscal challenges due to revenue losses from lockdowns imposed around the world. And as countries start to open their economies again, as we see here in Malaysia, and begin to unwind the fiscal stimulus, how can countries ensure the overall resilience and sustainability of the recovery? And more specifically, how can we use the tools of Islamic finance to help accelerate a green and inclusive economic recovery while mitigating the effects of COVID-19? So in this respect, let me share some thoughts about these questions. First and foremost, Islamic finance is inherently well-positioned to be an effective instrument for supporting global efforts to realize the SDGs by 2030. I think this is the position of the World Bank, particularly in relation to the climate crisis, and that is because of its direct link to physical assets and the use of profit and loss sharing arrangements, which encourages the provision of financial support to productive enterprises that can increase output and generate jobs. Its emphasis on tangible transactions, which ensures that the industry only supports activities that serve a real purpose, increasing the chances of increased output at the country level. And it emphasizes also risk sharing It has linkages to real economic activities, as was mentioned. It focuses on partnerships. It has an equity-focused approach. It has a widening geographic reach around the world and a rapid asset growth in the global economy, which renders it a reliable source of financing for responding to the challenges of COVID-19 and climate change. Now, more specifically, the following Islamic financial instruments can be used to mobilize resources for financing a green recovery and rebooting economies. Sukuk can be used to mobilize resources to finance infrastructure development projects such as water and sanitation projects or sustainable transportation systems. Sukuk can also be used in promoting investments in climate change solutions or funding health programs in developing countries. Istisna contracts can be used to finance sustainable and affordable energy facilities or build resilient infrastructure. Salam contracts can be used to support sustainable agriculture. Islamic funds can invest in Sharia-compliant businesses across a broad range of sectors such as renewable energy, sustainable fisheries, forestry, agriculture, and education. And takaful can increase the resilience of individuals and businesses facing catastrophic events or disasters. And now, while the Islamic finance industry has made impressive progress, the sector is still relatively small and developing. And despite the rapid growth of the industry, it still represents around 1 to 2% of the global financial system. So there's considerable scope for further growth in this market. The development of the industry has also been a bit uneven, still largely concentrated in the banking sector. And the Islamic capital market development is relatively recent, largely limited to the market for sukuk. And Islamic insurance, takaful, is still in its infancy. So there's also a lot of room to grow. And in many instances as well, gaps continue to exist between the potential and the practical reality of Islamic finance. For example, short-term murabaha financing is still the predominant instrument. Profit and loss sharing principles are not applied consistently. And there's also a tendency to mimic conventional financial products. Now, to ensure that the industry fulfills its potential in supporting the SDGs and a green recovery, there's a need to strengthen Islamic finance on various fronts, including strengthening the legal foundations of Islamic finance, including insolvency and bankruptcy frameworks, improving the regulation and supervision of Islamic financial institutions, enhancing corporate governance and risk management practices, promoting the standardization of products and documentation, raising awareness through appropriate financial literacy programs, and increasing the number of skilled professionals. On the side of the World Bank Group, our institution has been active in fostering the use of Islamic finance for sustainable development through partnering, for example, with the Malaysian authorities to issue the first ever green sukuk, and with the Indonesian authorities in building capacity for green sukuk proceeds management and reporting, through producing analytical reports covering the linkages between Islamic finance and economic development, particularly in the areas of shared prosperity, financial inclusion, fintech, green finance, waqf solutions, and public-private partnerships, and through investment transactions in energy-efficient and Sharia-compliant infrastructure and transport projects. Going forward, Datuk, we will continue to strengthen our partnerships with our key stakeholders, such as the IFSB, the Islamic Development Bank, and the Accounting and Auditing Organization for Islamic Financial Institutions, in fostering the long-term development of Islamic finance and maximizing its contribution to sustainable development over the next 10 years. And with those words, Datuk, I will yield the floor and hand it back to you. Thank you.
Thank you. I mean, very much enlightened with your comment just now, covering the products, the issues, and also the way forward. I think from that comment, if I may go now to Farmida, because we have heard from Firas just now a number of potential from the Islamic contract, from the Islamic perspective, but on the ground, we have not seen that much happening. So perhaps if you could comment from your own experience, what went wrong? I mean, what make the whole Islamic finance and sustainability didn't marry well between the two? And this is something perhaps your own experience, the psyche, perhaps the risk appetite, the new way of looking at the return of investment. It could be many other factors that could be the reason. If you are keen enough to comment on this, Farmida, and we'll be grateful to hear your thought on this between the practice and the theory and the practice on the ground. Thank you.
Thank you. I sort of share quite a lot of Firas's concerns about the uneven growth. And I think it's really instructive to compare the development and growth of Islamic finance with what we've seen with social finance. My sense is that we had, I tend to focus on particularly Islamic capital markets, but from about 2003 to 2008, we saw a period of rapid innovation and expansion. And really, since then, we haven't seen very fast either development in the nature of the products that are coming to the market or in the sort of significant growth of the market. It's been sort of 1 to 2% of the global economy for what feels like a very long time. And I think if you compare that to social finance last July was valued at $40 trillion, and that had doubled in the previous 4 years, and it had trebled in the 8 years, so from 2012 onwards. So I think if you look at the potential rate of growth for a values-based form of finance, there is a yardstick against which we can measure Islamic finance. Now, why it hasn't grown as quickly is an intriguing question, and I think it's because Islamic finance has tried to remain very close to conventional finance, to try and make sure that it is within the broad stream requirements of conventional investors who, as I said earlier, will invest in Islamic products depending on price and credit quality of the issuer coming to the market. But I think this is now an opportunity. We've all been talking about the SDGs. We've all been talking about how we need to rebuild better after this after the financial crisis that is to come from the health crisis. And so this is an opportunity for Islamic finance now to look at the growth in sustainable bonds, to look at the social expansion of bonds. And there is now a framework which can be easily incorporated by Islamic finance. The ICMA principles that have been created for green bonds, for sustainability bonds, for social bonds, all of those things would work perfectly well for Islamic instruments as well. And they go to the heart of those traditional concerns that we've had around form versus substance. Those ICMA principles go to the heart of what the proceeds are used for and how you can track what those proceeds are used for to make sure that there isn't a greenwashing, there isn't a pretense that these are sort of intended for ethical purposes and that are not then carried out. So I think we are now moving to a point where there is a real sort of interaction between the principles and ideas behind Islamic finance as we've known them, and where the conventional market is in a substantial way. So I think the current situation presents a fantastic opportunity. And we're seeing this year as the year in which this is going to become utterly mainstream. So we expect the G7 meeting that will take place in the UK in the summer to focus on climate change, to focus on development after the pandemic. And then, of course, we have COP26 in November that is taking place in Glasgow. And everything that we're seeing from the new US administration being committed to climate change, China committing to being carbon neutral by 2060. So all of those things are inherently Sharia compliant. I mean, last year was an interesting moment when it came to climate change. We saw green bonds reaching $1 trillion in the market. There had been a concern that perhaps green bonds had become less relevant last year because of the need to raise money to deal with the pandemic. So social bonds were taking over from about March to certainly about August. But we saw a huge number of green bonds coming to the market in the last quarter of last year. And so this is all good news for a values-based financial system like Islamic finance. So having seen a slow period of growth and a slow period of innovation, I think this is now the opportunity for Islamic finance to step into the mainstream and say, these are our principles, this is what we believe in. And the rate at which conventional investors are moving certainly a part of their overall assets under management into these values-based form of investing is extraordinarily fast. And so there is a market, a much, much deeper market now for Islamic finance to focus on. So I'm not sort of seeing at the moment, I'm not seeing new instruments coming into the market. I'm not seeing a huge growth in Sukuks coming to the market, as we've just heard from the other speakers, but I am optimistic about what the depth of this market means for Islamic finance, because the one thing Islamic finance has always done is respond to investor demand, and I think it is there now.
Thank you, Farmida. Interestingly, you have commented on the current market condition, and perhaps your hope as a practitioner in that part of the world. Rafi, if I may come to you now, perhaps you may comment on Farmida, a kind of insights, what is happening on the ground now, and why are we not developing that much and deeper compared to the social finance or the high, the environmental based financing. We are still stuck at 1% compared to the conventional banking assets. So perhaps it's open question to you. You may respond from whatever angle and perspective. Please. Yeah.
Thank you. I think it's a very interesting point that you've raised. Yeah. I mean, from a historical perspective, Islamic banks have always perceived that once you are Sharia compliant, you've been able to eradicate negative impacts. So by going through the screening and eliminating the prohibited sectors, we just assume that the negative impact in the portfolio has been mitigated or eradicated. And on the positive side, there's always been a push by the fuqaha to shift towards risk sharing. So on one side, we have sort of, mitigated the negative impact and then push risk sharing to increase the positive impact. But what has happened over the years is that the ambit of negative impact and positive impact has broadened. And somehow we were still stuck in the 11th century in terms of our worldview of positive impact and negative impact has not significantly changed. And to some extent, the fuqaha have always played the role of lawyers, looking at the permissibility of the contracts. Because in the past, if you remember, the role of this social and environmental impacts have been played by the muhtasib, the ihtisab. They have been playing that role more effectively than the fuqaha. So that division doesn't exist now. So we need the fuqaha to actually play a greater role by saying, hang on, the impact that the portfolio is creating is beyond the same sectors. Because you could have an impact on the environment, you can have impact on social conditions, you could have impact on the way the waste management is being driven by the financing portfolio. So you need to have a long list of impacts. That requires a mindset shift in the way Islamic banks view both positive impact and negative impact. And the starting point is we already have global movements like the UNEP-FI that have developed United Nations principles for responsible banking. And if you look at the PRB, it starts with alignment with SDGs, the Paris Agreement commitments, and other drivers from the national or regional agendas. Now you can put Maqasid Sharia as part of your commitment. The next principle talks about you then, after you have aligned with these strategic objectives, then you come up with how you're going to assess positive impact from your financing and activities and look at the negative impact. And then come up with a process where you assess and have a clear targets that the greenhouse gas emissions coming from various financing in my portfolio. So let's say I have 200 subsectors from plantation to manufacturing to oil and gas to transportation to construction. We create subsectors within these sectors and analyze the impacts coming from each of the subsectors. And then come with the targets that over the years, the next 3-5 years, I'm going to reduce the negative impact coming from financing to these subsectors. At the same time, Islamic banks need to choose certain positive impact sectors. Maybe Islamic banks should promote more micro and SME investments, financing. So you then take that cause and say, look, I'm going to prepare my bank to actually move towards that segment to create more positive impact. Same goes for affordable housing and economic empowerment. So Islamic banks need to actually broaden, move towards impact, what we call impact assessment, and have clear targets. Without impact assessment and impact target setting, we will still be talking about how great Islamic banking is and not able to actually shift Islamic banking progressively towards creating the really needed impact in our societies today.
Okay, thank you, Rafi. I think we are coming to the end of the session, and we have taken a longer time a bit. If I can, invite Dr. Bello to comment on some of the issues which have been raised from the IFSB perspective, which area that you wanted to comment and wanted to leverage on synergize with other comment by the other esteemed speakers. So you are welcome, but we have another 5 minutes to go before we can conclude and move on to the next session. Dr. Bello.
All right, thank you, Dato. I think the discussion and the contribution by fellow panelists was wonderful, but I think I want to reiterate the significance of the digitalization, the accelerated digitalization. We believe it is an enabler, it is a great opportunity, and that's why we welcome and we commend the digital banking initiatives as well as Islamic initiatives among the IFSB members, because we believe sustaining the growth momentum of the Islamic banking industry is very, very crucial with the digital banking. And it will also enable broadening the Islamic financial service industry's current outreach. It will help us explore more new horizons for the Islamic finance industry, in the sense that opportunities, as all highlighted by many different sectors of the economy, can be explored using the digital banking and the Islamic Fintech as well. Unlocking the opportunities, and especially in financially developed markets, with a minimal and no presence of Islamic banking is very, very challenging, because we believe the current challenges that we've been faced by many jurisdictions with regard to the economic recovery agenda, this necessitates the deployment of alternative finance, which is Islamic finance, because while the economic lockdowns and the economic crisis due to the pandemic has resulted in quite a number of filing debts among the member jurisdictions, we also believe the desire and the quest for for having a vaccination or a future plan for vaccinations, the funding that will be able to fund such kind of initiative requires an alternative finance, and we see that the potentials of increasing issuance of sukuk and the deployment of Islamic finance activities At the same time, we believe if we are to enhance the Islamic bank's compliance with regulatory requirements and risk management capabilities, there is a need also to ensure by the regulators a sound capacity building across all levels, not only for the central bankers or the supervisors, but as well as the marketplace and the Sharia scholars need to be carried along. At the same time, we also look at a greater opportunity in terms of the Islamic finance playing a bigger role more in trade financing. So looking at all these areas, the role of the FSB is to have an eagle eye on the potential vulnerabilities and risks that is associated with this kind of initiatives. So we will continue to work closely with our members and to ensure that these kind of risks and vulnerabilities are being mitigated and being managed proactively. At the same time, also, one last thing that I would like to share is that we have, at our own end, issued quite a number of supporting statements to the industry, which will be very, very beneficial for our members to ensure that the risks that is being posed by the pandemic is being mitigated. So I believe the potential of Islamic finance is greater in the nearest future. But the need to have a sound regulatory framework and sound risk management frameworks are very, very essential for us to sustain and have a stable and resilient Islamic financial service industry.
Thank you. Thank you, all the speakers. I have to thank everyone for your tremendous and insightful intervention. Some of the keywords I can extract from the 6 great minds of the speakers of this session: digitalization, investors' demand, impact banking, financial inclusion, sustainable banking, and alternative investment. Perhaps this could be a few takeaway from this session. Hopefully 2021 and moving forward will be brighter and giving more opportunities to everyone, the regulators, the practitioners, the customers, and the public at large. I think with that, I would like to thank everyone again for this wonderful session. I would like to apologize for the organizers in the next session if we have taken a bit longer. This is due to my inability to control the session, but inshallah we can catch up a bit after this. Thank you all the speakers. Thank you all the participants. Hope you can stay back for the next session on Global Islamic Capital Market Outlook, another interesting session. Thank you, speakers. Back to you, Madam MC. Assalamualaikum warahmatullahi wabarakatuh.